If you want to beat the S&P 500, you can just buy the NASDAQ 100. And that's fine if you're building a nest egg, but if you're retired, the NASDAQ 100 pays almost, nothing. And the S&P 500 pays a little more, but not enough to live on. Today, we'll look at a tech fund that outpaced the S&P 500 over the past decade. It is more volatile, as tech funds tend to be, but it pays over 8% and has a 10-year history of no dividend cuts and 7 dividend raises. I first reviewed BST back in February 2023, and since then, its performance has been, just okay. Over that 20-month period, BST has lagged JEPQ, and it pays a slightly lower yield, so why bother even looking at it? The short answer is performance history. JEPQ's only been around since 2022, and that's only a little over 2 years. BST is about to celebrate its 10th birthday. If we look at total return since BST was born in 2014, it posted some good numbers. Over that 10-year period, it's ahead of the S&P 500, and during its heyday in 2021, it enjoyed a total return of more than double the S&P 500. It's clearly more volatile than the S&P 500, so timing matters. Obviously, this would have been a bad time to buy it. I put the S&P 500 on there because we're all familiar with it as a benchmark, but to be fair, we should also compare the NASDAQ 100 because it has a heavier tech weighting. BST and the NASDAQ 100, represented here by QQQ, kept pace with each other for a while, then BST pulled ahead, and now the NASDAQ is ahead. It's quite likely that over the next decade, the NASDAQ 100 will eventually be the winner, but as I mentioned at the intro, almost no income. And I want income because if you're new to the channel, I retired in 2017, and that's when I got serious about researching my investments in greater depth, and this channel is where I share what I learn. I mostly focus on stocks and funds paying consistent yields of 8 to 12%, and if you'd like a copy of my portfolio, it's available via Armchair Insider. Link in the description, it's free. We'll get into the pros and cons of BST and its pricing, but first, let's take a closer look at the income. The distribution history is excellent. The 2 massive spikes and 1 little one, those are special distributions. The fund realized some unusually high gains in those years. We'll look at how they managed to land those big wins shortly. The rest of the lines pretty much speak for themselves, consistent and growing, although no increases since 2021. This distribution chart came from Snowball, but I mostly use Snowball to keep track of my current and future income. I can visually rank my portfolio by current yield, check the yield on cost, and most importantly, know exactly when the next dollar will land in my account. There's a link in the description for a free trial and a discount. The lines on the chart look consistent because these are managed distributions. The fund managers know that investors want to see a chart without any dips. So if the capital gains aren't enough to fund the dividends, they will supplement with return of capital. The amount fluctuates every year. In 2023, about half the distributions were return of capital. Year to date for 2024, and BlackRock issued an estimate of 100% capital gains and no return of capital. If you're wondering if the return of capital is the good kind or the bad kind, I'm assuming it's the bad kind, meaning returning investors' principal. If they paid out a large percentage of return of capital for several years, it would be destructive to the value of the fund. So it is something to keep an eye on. The BlackRock's Science and Technology Trust, ticker BST, is a closed-end fund. BlackRock is the biggest asset manager in the world with over 10 trillion, that's trillion with a T, dollars under management. Unlike most closed-end funds, BST doesn't use leverage to boost its yield. There's a tiny bit of dividend income from the portfolio, but tech stocks pay very little, if anything, really. Most of the income comes from 2 sources. The first source is selling covered calls on tech stocks. That means they sell some of the upside in exchange for an immediate payment, which they distribute to shareholders. The second source of income is less consistent, and that's realizing gains in the portfolio, or to put it another way, selling a part or all of a holding, hopefully for profit. Let's take a look at those holdings. The first thing I noticed is that the portfolio is heavily weighted to the top 5 fairly familiar names. To hold this fund, I think you'd want to be on board with those companies because they make up almost 40% of the portfolio. Then there are some unfamiliar names. Does Project Debussy ring a bell? Anybody? That one required some digging. And this is where the answer lies to the question, how the heck did BST outperform the NASDAQ 100 in 2021? Project Debussy is a stealth supersonic jet that cannot be detected by radar. I'm just kidding. It's not that cool. It's just a data and artificial intelligence company called Databricks. It's not particularly famous because it's a private company. BST invests a portion of the portfolio in private companies, and I imagine that as the largest asset manager in the world, they have good access to some good deals. The wins or the losses they make on these private placements can be huge. For example, if we look at page 101 of the semi-annual report dated June 30, 2024, we can see that BST paid just shy of $1 million for a slice of Databricks. That was in 2020, 4 years later, and it's worth more than 4 times that, at least on paper. That doesn't help BST investors until they cash out through an IPO or another company acquiring Databricks. The IPO market has been icy cold for the past couple of years. I don't know when it will heat up again, but falling interest rates would probably help. The pros and cons for BST haven't really changed since my initial review, so I'll just recap them briefly before we move on to pricing. Apart from the yield, here's what I like about BST. BlackRock's size and breadth gives it access to more deals and markets than a small fund manager. Also, they have the ability to analyze the massive database of information their network gathers and use that data to analyze risk. The software they've developed for this is called Aladdin. The value of that software is somewhat validated by the fact that BlackRock licenses it out to other companies like Deutsche Bank, for example. Here are the risks and concerns I have about BST. BlackRock smooths out the income for this fund using return of capital, as we saw earlier, and that's okay over the short term. But if the market is unfavorable for years on end, it eats away at the net asset value so much that it's difficult to recover. The private placements do move the needle for the returns of this fund, and their financials are not available to the public. So you can judge whether you like the holdings such as Nvidia or Microsoft, but for the private part, you just have to trust that BlackRock knows what it's doing. And the last major negative, as with all tech funds, you need to have a strong stomach to ride the price volatility. Before we get into pricing, my research for this video included 6 analysis articles from Seeking Alpha. Most of them were fairly similar, but the one I liked the best was actually the least enthusiastic about BST. Nick Ackerman went into more depth than the other authors, and he also compared BST to its sister fund, BSTZ, or BSTZ, and also another fund called STK, which is also focused on tech. And another one that I like. If you're an income investor, Seeking Alpha gets you access to more research than any other website or app. I'll put a link in the description to Nick's analysis and a link for a free trial and a discount. I'll also link to this video that walks you through the 4 features I use to analyze income investments. Pricing is the reason that I made this video. BST is a closed-end fund, so it can trade above or below the value of its assets. If we look at the 5-year history comparing price to NAV, we can see that it has traded as high as 12% above the NAV and as low as 6% below the NAV. When I started preparing this episode, the discount to NAV was 5.54%, which looks to me like a pretty good entry point. BST's price began a decline at the end of 2021, and that was also the time of the last giant special distribution. IPO activity began to decline at the same time. I don't think that's a coincidence. For BST to fire on all cylinders, it needs the stock market to do well, particularly tech stocks, and it needs the IPO market to heat up again. So investing in this fund requires some patience. The 10-year history is longer than most tech funds, and the consistent distributions I think are a big plus. I've been holding a tiny allocation to BST for quite a while, and I recently increased that allocation as referenced in the October 8th edition of Armchair Insider. I like the discount to NAV and the potential for its private placements to benefit from falling interest rates. If you like high yield and you want to diversify beyond tech into something like credit markets, FSCO is yielding just over 10%, and I explained the pros and cons in this video. That wraps it up for this BST update. More Armchair Income coming soon. Armchair Income.